Hi everyone. Today is a Sunday, and Sunday is the only day our firm don't have a 3 p.m. webinar, but there is something really coming through as if a lot of people out there needed some clarification. So I put together a brief talk related to day traders. And for day traders, and you know what I mean, you are the one trading stock and heavily, and the largest account so far come across our desk is over 100 millions transactions with one entity. So there are a lot of people are into the stock trading, and what I want to talk to you about today is the mark-to-market election. A lot of folks um, realized if they have elected mark to market last year, I'm talking about in 2020 when they filed 2019 tax return, and on that April 15 due date, and on that date, if they filed, or on July 15, remember they extended the due date to July 15. So if you have filed mark-to-market election at that time, and you would be able to treat your 2020 tax return as a trader status. So with that, a lot of people calling our firm or contacting our firm are the one that they did not do that. In hindsight, they wish they have done that, but they didn't. Now they're looking at their 2020 tax return, realize how much of wash sale that was not allowed. So they want to know whether that could be done. So this is where it coming through almost, we almost seeing it as a general issues out there. So we want to put in this webinar together to help you. And again, no responsibility disclaimer, but that's what advise is that our company's attorney would repetitively inform me and inform our staff that when we are on the internet, we do need to declare that Community CPA is part of our service to provide help to you, but this is a free service to you, and we don't take responsibility, but yet the information we give you is sincere, is what we think that you need to study and you need to know. So I'm not going to talk about day trader benefit. You know what benefit that is, but I want to talk to you about the election. The election must be done before the first due day of the tax filing due day. So for a day trader who used to trade under their personal name, they use 1040 to file taxes. So of course that would be 1040 and April 15. And this year is May 17, and the last year was July 15. So, generally speaking, is May 15. If you don't file your taxes, you file extension, you need to include the election with your extension. But if you don't file, if you filed your tax return on time, then you need to include that election statement with your tax return to be sent in 2020 for 2019 taxes. So you will elect for the year next, which is the 2020 years, right? So a lot of people didn't do that, but now they're receiving the 2020 brokerage statement, realize that how much wash sale was disallowed. They're surprised with their capital gains. So a lot of people scrambles trying to figure out what to do now. And can I retroactively elect my status? So I will give you some histories here to make you understand that when you are thinking of going back to do this mark-to-market election, where in year 2021 you received the whole year statement of 2020, now you want to go back to elect 2020 to be mark-to-market, and that action is called the 9100 relief. And in this particular relief, it is only going to be granted. It is in the past cases is only going to be granted when there is no damage. There's no there is no damage to the IRS's tax dollars. So if by electing this, and you actually will save so much taxes, the IRS gonna lose so much taxes, especially if you already filed your 2020. Now you're thinking about 9100 relief, and you probably paid how much of taxes you already did, and now you want to change that back to market without doing elections in earlier and on time, and with economic results that is negative to IRS, the chances you to be relieved of that and to be allowed that is very little. And so that's one of the benchmark the IRS uses to see whether your election will trigger damages to their collection of taxes, or they will be less collected. They have a less dollar to collect from you. So with that, I would say that it's never a good idea for you to go back to retroactively elect mark to market to do amendment. But of course, there are cases, there are cases in the past, the taxpayer says, oh, I just didn't know the rule, and so I didn't apply for it. But I actually, did act this way. And in the past, there are court cases that allowed that. But they also are court cases that did not generate much of a tax benefit for the taxpayer. So the IRS didn't really lose anything. So those are the cases we have seen in the past. But the one IRS really going to miss a lot of money, a lot of tax proceed. And that's where the retroactive election is being looked upon very carefully. And you have to get IRS okay on that before you can proceed for amendment. Now, having said all of that, and it is not too late to file election for year 2021. We're already in year 2021 in April. So how you are trading for January to April, you already know. And if we do not want to speculate the rest of the year, and you can do mark to market election right now before May 17 due date. And if you file extension, you include that in the extension. If you file original tax return for 2020, you include that in that tax return. So that needs to be filed. Once it's filed, it will become effective for 2021. You're already in 2021. You really should already knew so far how you feel about the stock market. How is your wash sale become? And folks, you know that you're not really losing the wash sales, right? You're not losing the wash sales, because the wash sale dollars that was disallowed is actually becoming part of your basis for the capital gain calculation. So you won't make so much more capital gain with the wash sale because they added to your basis. So your stock is more expensive, even though you spent $7 to buy it. But because the disallowed wash sale loss of the $3, actually your basis is 10. So I want to say that to you because I don't want people to think that you completely lose the wash sale. It is a time capsule. It is a time difference. It is going to benefit you when you sell that, when you have your stock with capital loss or capital gain. If it is capital loss, of course, you only got $3,000 deduction. It doesn't help you today. But if you had a capital gain in the future, that losses would come to offset, and obviously you don't lose it, and you still have time to claim it back. And so that for that reason, I want to mention to everybody that don't look at the wash sale as if it is the end of the world. It is not. But of course, if it is beneficial today, you want to elect that to be mark to market, because you're also losing your job and you're doing it full time as a day trader. Obviously, you're qualified to do that, and you should do that, and so that you can bring your income and expenses to this new method of accounting, right? So with that, I want this particular talk to be a reminder that if you want to make your 2021 a trader status and elect to be mark-to-market treatment, you need to do it now. No delay. You cannot delay it. So I want to make sure that you hear me really, really clear. So once you did that, and by the time we arrive 2022, and it's time for you to file tax return, I just simply want you to remember when you do your 2021 tax return that you turned one or two of your investment account into your trader account. In that case, you need to make sure that you're actually filing Schedule C. You're actually filing 4797 Part 2. You're actually doing 3115 accounting method change. So those are three things that you are doing, and you want to make sure that your tax return matches what you are doing on the market-to-market election, so you don't get yourself elected but didn't really do the rest of the work right. And also there's people ask me, oh, someone told me that I should form a company. And, that's absolutely correct. That's absolutely, it wasn't a wrong advice, because when you have the day trader status, it is so much better you put that into a business structure. But that can be sole proprietorship, can be LLC, and so you can do all kind of business structures, but the easiest one, it is the Schedule C as sole proprietor. Sole proprietor is a business entity. So you are doing that under the Schedule C. That's why I was telling you that you need to have a Schedule C. You need to have the 4797 Part 2 as what you document your transaction, not Schedule D. Okay, you also need to file a accounting change form, and that form number is 3115. So with all of that, you're expert. You're expert. You know what you're doing with the day trader status. So I hope this short talk is really helpful, and make sure you know that everything we said here, and you can go online, go irs.gov. That is the best place to verify knowledge, and don't need to do Google search, and you need to look at the sources of information where that come from, and don't mistakenly for old news and outdated talk, and maybe the talk was partially clipped, so you didn't hear the beginning, didn't hear the end, and then it's not right? And obviously our firm, we take cases. So if you run into issues, and you can look upon us as your resources, we are your backbone. We support you. Okay. And our phone number here is 515-288-3188. And the email you can send to our email address. My email address is ying@communitycpa.com. And you can contact me, and I always reply emails, and I'm workaholic, so I work all the time, and you can always count on me to get back to you. And I always have your best interest in mind as well. And that is the spirit of the whole firm. We have 30 some people here, and if your assistants need to be helped by our specialty teams, and then I will introduce you to the team leaders, then you will get to meet them. Okay. I'll talk to you again, and thank you for joining me for this short session. Bye-bye.